Thank you for joining us once again here at Seafried and Brew for our weekly briefing. This week, we want to go over the advanced estimate of the fourth quarter GDP. And as we all know, it came in at 2.6% below the anticipated, the consensus, the market consensus of around 3%. And when we look at the different components, we can see where we fell short in the fourth quarter. One place it did not exist was in consumer spending. The component consumer spending brought in 2.58 percentage points for the fourth quarter compared to the third quarter at 1.49. So we had a very strong consumer segment this go around. We got hit though on that investment. This is the business investment portion, which includes the inventories, and we'll talk about that in just a minute. But you can see that came in at 60 basis points, where last quarter it was at 1.19 or 119 basis points. Government came in at 50 basis points higher than last quarter at 12 basis points, so that added. And then we had a detraction here from the net exports imports, pulling away 113 basis points out of that contribution to GDP, whereas last quarter we were up 36 basis points. So this is how we look at the overall GDP, and now we're drilled down into these different components. When we look at the components, we looked here as their contribution. We can also look at it in ways of growth over the quarter. And you can see consumer or personal consumption here up 33.8% from the prior quarter, where it was up 2.2%. So we had strong growth in the consumer segment. If we look at durable goods, that's actually up 14.2%. So we had great growth in durable goods in the fourth quarter, and that's a positive as we move into the next quarter, into the next year, in fact. When we look at private investments, you can see that went up, but just 3.6% compared to the prior quarter at 7.3. So we had some detraction from this, and we can see inside the numbers, it was not from the fixed investments, which was actually up 7.9%, but that would leave then the inventories. So when we look at the different components of the investments portion, like I said, fixed investments was not an issue. In fact, it contributed 127 basis points to the GDP, whereas last quarter it was only 40 basis points. So we see a big push up in the non-residential fixed investments at 84 basis points and the residential at 42 basis points. That's a big positive because the last two quarters, this residential portion was actually negative. The big detraction though came in terms of inventories. Look where we have negative in inventories, down 67 basis points. That's detracting from the overall GDP, while last quarter we were at 79. Now this is setting us up for hopefully a good first quarter GDP when we factor in the investments having to replenish those inventories in that investment portion. So this might delay some growth into the first quarter. We'll see that when we look at those numbers next quarter. But overall, that was a big detraction. Over half of the contribution was taken away because of the inventories. When we look at the net exports, you can see exports increased by 6.9%. That's a pretty robust growth. We'd have to go back to the first quarter of 2017 to beat that. But when we look at imports, that actually grew by 13.9%. So a growth in imports actually takes away from our GDP. And you can see that was in terms of goods. Goods were up 16.8%. When you look at that on a contribution basis to GDP, we can see overall that detracted, as we saw before, 113 basis points. Imports represented 196 basis points. Then we take the benefit out from exports at 82 to come up with that 113. So we saw a lot of imports this quarter, and that should reverse itself in the first quarter. So we shouldn't see this distraction in the first quarter 2018. Inflation. So we saw the inflation come in still kind of subdued here month over month. We had just a 0.1% in PCE, similar to the consensus, just under where the prior month or November came in at 0.2%. Year over year, very similar at 1.7%. For the year over year PCE rate at consensus of 1.7, below prior at 1.8. So we saw just a little bit of trail off in the PCE total number. When we look at the core, remember this is ex food and energy, came in month over month at 0.2, at consensus, and above the prior month of 0.1. When we look at the core year over year, consensus came in at 1.6. We came in at 1.5, just 0.1% below that, and the prior month was 1.5 as well. So overall, with inflation still very subdued in here, we're not showing any type of pricing pressures at this time. When we look at the Fed meeting this week, anticipated no real change in the Fed funds rate. That's been keyed in for maybe March in their March meeting, so we'll keep you abreast on that depending on the information that comes out between now and March. We'll see if those probabilities kind of pull off a little bit. But as for now, Fed looking to come out and not making any changes with the Fed funds rate. Well, that's what we have for you this week. We look forward to seeing you next week. Have a great week.